Did you know that if Congress doesn't take action, the estate tax exemption will be cut in half by 2026? That means families who never thought they'd owe estate taxes could be facing a hefty tax bill. In this video, I'm going to explain the new estate and gift tax laws for 2025, what's set to change in 2026, and the one thing you should consider doing before the year ends to protect your wealth. I'm estate planning attorney Mike Smith with Smith Barid LLC, and I'm one half of the Estate Planning Guys. We help families and business owners protect their assets and create solid estate plans so they can pass their wealth on smoothly. So let's talk first about estate and gift taxes in basic terms. I'm going to simplify things here to make it easy to understand. A lot of people hear estate tax and they think it applies to everyone. And technically it does, but in reality, that's not the case. So the estate tax is a federal tax on the transfer of wealth after someone passes away, but only if their estate is above a certain amount. And the gift tax works in a very similar way. Basically, the gift tax was created to prevent people from avoiding the estate tax by giving away all of their money before they died. So the gift tax was just sort of to close a loophole in the estate tax. And right now, most families don't have to worry about these taxes because the exemptions are very high. But here's where everything is going to change. For 2025, the exemption amounts have been updated. So the estate and gift tax exemption is $13.99 million per individual for 2025. And for a married couple, by utilizing both couples' exemptions, it's $27.98 million that's exempt from the estate tax. So you can see that doesn't impact a whole lot of people. And then also let me talk for a minute about the annual gift tax exclusion. So you can give away currently $19,000 per recipient to as many people as you want without using any of that gift tax exemption that you have. So if the gift is $19,000 or less, you can give away as much as you want to as many different people as you want to with no need to file a gift tax return, no gift tax due, and it doesn't affect your exemption. So this means that unless your estate is worth more than $13.99 million or $27.98 for a married couple, you won't owe any federal estate tax. So that's the good news for you. But the bad news is that the exemption isn't permanent. So here's the thing that you need to understand. These generous exemption amounts expire at the end of 2025. So on January 1st, 2026, unless Congress takes some action, the estate tax exemption will drop back to approximately $7 million per individual, adjusted for inflation. So that's half of what it is now. And this means that many families who never expected to owe estate taxes could suddenly be affected by the estate tax. So imagine this. A couple with a $15 million estate today owes $0 in estate tax under the current exemption. But in 2026, with a $7 million exemption per person, their estate could face taxes on about $1 million. So their exposure is about $1 million. And that would leave them owing potentially $400,000 or more in estate taxes. And they're going to have to hire somebody to do an estate tax return, etc. If you have a family business, real estate investments, or significant assets, this change could hit your estate really hard. So what does this mean for high net worth families and business owners? Who should be concerned about these changes? Well, families with estates over $7 million. So if your estate is above the new exemption limit, then your heirs could owe up to 40% in federal estate taxes. And if you own a closely held business or maybe some farmland, your heirs might need to sell off assets to cover their estate taxes. If you're, land rich and cash poor, they might need to sell off some of that land to be able to generate cash to pay the estate taxes. And they've got 9 months to do it after you pass away. Even if you're under that new exemption, using the higher 2025 limits could allow you to lock in tax-free wealth transfers in the event that you end up above that exemption on down the road. So this brings us to a critical strategy that you're going to want to consider before the end of 2025. And that is that you're going to want to think about potentially making some gifts during your lifetime to use that really high exemption you have. Now, there's one more thing you need to think about, and This kind of might throw a monkey wrench in all that. You might have heard that there's a bill pending in Congress that could eliminate the estate tax altogether. It's called the Death Tax Repeal Act of 2025. And that bill already has a number of supporters. I've read there are around 200 supporters of that bill that have signed on to it. So that, is a pretty good bit of support. And supporters argue that the estate tax is double taxation. I think we all agree with that. You've already paid taxes on your money, so why should you pay again at death? It doesn't make a whole lot of sense. Opponents say that the estate tax is necessary to prevent wealth from accumulating in just a few families. The reality, the bill that's introduced, it's never passed before. So we've had bills like this before seeking to repeal the estate tax, and they've never passed before. It was possible that Congress could make changes, but you can't rely on this repeal happening. And that's why proactive estate planning is critical. So let's talk about some planning strategies that you might want to consider before 2026. If your estate is near or above that future $7 million threshold, now's the time to act on these strategies. So here's some things to consider before 2026. You might want to use your lifetime exemption now. The current $13.99 million exemption is a use it or lose it kind of thing. So you could gift assets now and lock in that higher amount before it drops. Now, when you make gifts, you need to consider also the capital gains implications of that. To be able to do that, you're really gonna need to have the involvement of an estate planning attorney and perhaps your CPA to evaluate, from a capital gains tax standpoint, is that worth more than the estate tax, the potential estate tax, and how do we want to structure that? The other thing you could do is consider a spousal lifetime access trust. A trust like this allows one spouse to give assets while still giving the other spouse access to income from the trust. You could also consider some irrevocable trust. You could move assets into an irrevocable trust, and that will remove them from your taxable estate. That will use up part of your exemption, but that's okay. You could also consider charitable giving. So donating to charity can reduce your taxable estate while supporting causes that you care about, and you're gonna get a tax deduction for that as well. The last thing I want to say is if you haven't looked at your estate plan recently, 2025 is the year to do it. The decisions you make before 2026 could save your family literally millions of dollars. So what to do next? Well, this is potentially a huge shift in estate planning. The clock is ticking and the window to take advantage of today's higher exemption is closing fast. So what should you do? I encourage you to schedule an estate planning consultation with your estate planning attorney. We're happy to help you here at Smith Barid. If you don't have one, we'll help you evaluate your estate, understand the options, and make a plan before these changes take effect. You can click the link in the description to schedule a consultation if you'd like to. Also, if you found this video helpful, make sure to like, subscribe, and hit the notification bell so you don't miss out on our next video. If you want to dive deeper into estate planning topics, we have lots of YouTube videos on a myriad of different estate planning topics, so feel free to check them out. Appreciate you watching today. I'm Mike Smith with the Estate Planning Guys.